Hello, thank you for joining us today, and welcome to Intentional Community Conversations with Intend Indiana. In this series, we will spend time exploring topics designed to share community development resources available through Intend Indiana, including innovative financing and development solutions that create and preserve affordable housing, support neighborhood revitalization efforts, and foster small business development. My name's Kim Wherry, and I am the single family loan portfolio manager here at Intend. My job is to oversee our single family initiatives. So that includes, helping applicants with their applications, and also includes talking to our partner banks and other community development partners that help in our IndyAMP program and HomeSmart program. June is National Homeownership Month, so we've been sharing information about pathways Intend Indiana has created that make dreams of being a homeowner a reality, and also preserving homeownership. Intend is committed to creating access for all and sharing information about our programs. It is our hope that those who are watching will be inspired to give us a call or send us an email to learn more. Today, we're going to talk about our Edge Fund initiative and specifically preserving affordable home ownership using our refinance mortgage, which is called IndyAMP. The Edge Fund is a mission-driven CDFI that is focused on offering flexible financial products that will create diverse and inclusive affordable housing opportunities across the housing spectrum. So you may ask yourself, what is a CDFI? A CDFI is a community development financial institution, and a CDFI is a lender with a mission to provide fair, responsible financing to rural, urban, and other communities that mainstream finance options don't traditionally reach out to. Where others see risk, we see opportunity. IndyAMP is our refinance program through Edge Fund. IndyAMP was started as a result of COVID-19. We started it in 2021, and it allows homeowners living in areas affected by COVID to refinance their mortgage debt at a below interest rate for up to 30 years. IndyAMP also allows owners to remain in their homes, become current on their mortgage, and lower their monthly payment. So some of the features of IndyAMP include a 3% fixed interest rate for up to 30 years. You can have a 10, 20, or 30-year loan term option. The refinanced mortgage debt can be $20,000 or it can be up to $200,000. So we offer loans between those numbers. There is a 90-day deferral of the first payment. So you don't have to make a mortgage payment for 3 months. And also, the minimum credit score is 600. Some of the benefits to our borrowers include helping them so that there's no mortgage insurance that they have to pay with this loan. Also, there's no appraisal required, so the borrower doesn't have to pay for that. Closing costs can be included in the new loan, and there's flexible loan term options. The income is based off of someone's most recent 30 days of pay stubs. So a couple of the requirements for the IndyAMP program. Number one, you have to be an existing Marion County homeowner, and the mortgaged house has to be a primary residence. The existing mortgage debt can't be more than $200,000. And they have to be at or below the 120% area median income, which is AMI. And then they have to be negatively impacted by COVID or be in one of the target zip codes that we have. Now we can go ahead and bring Lorrel in. I'm going to ask her a couple of questions. She was a recent IndyAMP borrower. So hi, Lorrel. Thank you for joining me today.
Hi, good evening. Thank you so much for having me.
So I just wanted to interview you and ask you a couple questions about how you found out about IndyAMP and how it has affected you and overall your whole experience with it.
So I found out about IndyAMP just by doing a little research. I moved to Indiana in COVID. I lived in very crowded, very overpriced New York City, and I always said I didn't want to be there for 2020. And then 2020 happened, and COVID happened. I was like, I knew it. So I I had some friends here, and they suggested that I move here. So in New York City, I was a certified teacher, but when I moved here, I became like my primary caregiver for my father and my two children. And so I'm always looking for programs that might be able to help me or information because I'm kind of newer to the city. And so I had seen another program, I don't remember the name, but it wasn't regarding refinance and so forth. I think it was about something home ownership. And I looked at the program and I saw some of the people that were interviewed, and I said, wait, they're like me. They're regular working people. They're not like below poverty. Usually those are generally the programs that help with people that are, in that demographic. So I looked at it and I watched the other video and I said, wait a minute. So they helped her too. So, and then I said, I need to apply or call or get some information. I don't remember what I did. Probably I filled it out right there. And it was very late one night, probably 12 o'clock, because I am a nerd and I always like to get like a lot of information and know what I'm doing and what's here and what's available to people. And so once I saw that, I said 3 months, and I saw it was conventional, and they could set up your mortgage. It could have changed from a 30 to a 20, and then I wouldn't have that dreaded PMI that I tried to get out of it the year before. But just as they were going to finalize everything, the war started. And then they said, no, 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 we can't do it. The interest rates are high. It doesn't make sense. And I'm like, oh my gosh. So nothing happened. And then I found out about this program, and I was just so happy and excited. I've been telling all my friends, even those who don't live here yet, but if they have an interest in moving to Indianapolis, which a lot of my friends are trying to move them here anyway, I've been telling them, as well as the people that I know here and the people that, I've recently met, because I think it's an awesome program for people to be able to take advantage and to be able to have a lower interest rate, especially at this time of like 3% and 3 months. Like I brag about IndyAMP, like I work for you guys. But I'm just so excited that I found a program that was so beneficial for my family, because it does help. And I think when you have 3 months and oh my gosh, you could take that stress off. There's so many other things, child in preschool, there's all these other fees. And so I was just so happy to have found that program. And I didn't hear about it from anybody. I just, was on the computer searching. And when I saw Intent Indiana, I just started reading and I realized I could have benefited. So the people there have been so helpful. There's been one hurdle with the computer and things weren't going through, and they were able to override or fix it. There were so many different hurdles that happened. I forgot because it took a little while, because my job changed how they process payroll. So it was a little harder for the bankers to understand my income, my overtime income, and all these things that, the banks have to ask you. And so that took a little while, but we were, able, through communication and everybody working together, we were able to just jump over all those hurdles. And I was able to get my refinance mortgage in March. And I actually don't pay a mortgage again until July. So that has meant a world of difference for my family.
That's great to hear. So, can you share how IndyAMP, in your opinion, is different than some of the other lenders that somebody might turn to for help?
Yeah, it's so different, because right now all the banks, I haven't heard of any other bank giving 3% and 2% for home ownership and 3% for refi. I just haven't seen that anywhere. So for IndyAMP to offer this to families, I think it's just amazing, because so many people say, I'm saving up for the down payment, or they're in these mortgages and they're paying all these higher fees because of the insurance. And so, families need a break. Things are expensive, food's expensive, the utilities have gone up where I live. And so any break that we get, it's good for, families such as mine that are headed by one parent household, two children, now really three children. and an aging parent. So it has really benefited us a lot.
Can I ask you how your interest rate or like mortgage payment changed
Sure.
as far as, kind of like a average, how much you're saving with IndyAMP?
Yeah, and what's interesting is I had gotten a good mortgage too. It was a FHA, it was a 3.5. And even though my interest rate only went down 0.5%, I still was able to save on the mortgage insurance. So my mortgage went down from 1431 or 14, I want to say 1431 to about 1100. And I haven't paid it yet, so I'm not used to the number. But I want to say it's $1,114. So I'm seeing like a $300 difference. That's major for for my family.
That's awesome to hear. And thank you again for joining us. And I'm really excited that we were able to help you with your mortgage payment through
And I'm
IndyAMP.
happy to share
Thank
with
you.
other families. Sure.
If you're interested in learning more about IndyAMP, feel free to look at our website. It's www.indyamp.org. Thank you for tuning in today about our intentional community conversations with Intend Indiana. We hope you enjoyed yourself, and moreover, we hope something we said inspired you to want to learn more. Please make sure you are following us on Facebook and Twitter at Intend Indiana. And also, if you'd like to learn about our other initiatives, feel free to go to www.intendindiana.org. Once again, I am Kim Wherry, and we are ready to help you make your dreams of homeownership come true and help you if you're in need of refinancing. Please contact us and let's set up a time to talk. Owning a home and managing your mortgage payments can be achieved with a little time and a lot of support. We're here to help. Feel free to contact us anytime. Thank you.